Welcome to the deep dive. Our mission today, well, it's like a quest for the ultimate pattern recognition, really.
Mm-hmm.
We're examining the foundational traits of these one-changing, hyper-ambitious entrepreneurs.
Yeah, the titans, the ones who don't just build companies, they build whole systems. They redefine industries.
Exactly.
And we've pulled together a really fascinating stack of sources for you. This isn't just about one sector. You know, it's more of a cross-temporal study. We're looking at historical figures, think Rockefeller, Vanderbilt,
Okay.
alongside modern icons, people like Musk, Gates, Bezos. The real goal here is to get past the specific product.
Forget the oil, the software, the rockets for a minute.
Precisely. We want to uncover that shared psychological, that operational blueprint, if you will.
And what's amazing, what jumps right out, is even though the sources are so different,
Yeah, 19th century railroads, 21st century tech wars.
the patterns are just strikingly similar. It's incredible.
It really is.
So we're looking for the common threads. That an intense personality.
Oh, yeah.
The almost reckless appetite for risk.
Huge risks.
But this is key, I think, the drive for total systemic control.
That's it. That's the core.
Yeah.
Immense scale. It flows directly from that intense personal style, often unconventional.
Right.
And we want to show you how that individual ambition, that drive, translates directly into these massive market wins.
Okay, so where do we start? The founder's personality seems central.
Let's start right there. In the engine room, so to speak, we call this first part the dual nature of the founder, charisma versus control.
Okay, let's unpack this core personality trait. Because when we look at the founders of these enormous world-changing companies, well, you're rarely looking at steady, predictable managers.
No, not at all.
You're looking at figures defined by an almost theatrical intensity. Is that fair?
That's a great way to put it, theatrical intensity. What the source material really shows us about that unpredictable persona is a level of professional intensity that seems almost a hair trigger.
Hair trigger.
Yeah, like the ability to summon absolute focus. Maybe it's idealistic vision, maybe it's crushing critique, and just deploy it instantly. We see this so acutely in Elon Musk.
Right. He seems to embody two completely separate management styles. Like he flips a switch depending on who's in the room.
Exactly. His former assistant, Alyssa Butterfield, she recalled that amidst all the super dense technical meetings, he held this regular internal meeting. She called it very otherworldly. It was called Mars Colonizer.
Mars Colonizer. Not exactly a budget meeting then.
Not at all. This was the pure vision, the ideal core. And apparently it always put him in a really good mood.
Okay, so there's the visionary side.
But then there's the flip side, the notorious volatility.
And that volatility, it created real fear, didn't it? Especially around big partnerships.
Oh, absolutely. Take the account from Tesla's former CTO, J.B. Straubel. He talks about this formal multi-course dinner with Panasonic executives in Japan, a huge deal.
Okay, high stakes.
Very high stakes. And Straubel was apparently inwardly terrified of how Musk would behave.
Why? Because of the internal meetings.
Yeah, because in those internal meetings, Musk could be, quote, hell and brimstone, and unpredictable as all get out. Straubel was basically bracing for a full-on corporate disaster at the dinner table.
He thought Musk might just alienate these crucial partners they needed for the gigafactories.
That was the fear. But the sources say Musk displayed, well, perfect control instead.
Really? He flipped the switch.
He did. Straubel was, quote, mildly shocked and impressed. Because Musk instantly transformed, he became this incredibly effective, charismatic, high emotional intelligence business person.
Wow.
Laid out the whole vision for EVs, their collaboration. Straubel realized the intensity isn't just random chaos.
It's strategic.
Highly controlled, deployed strategically to sell that big mission when maximum persuasion is needed.
That switch, I mean, it must be exhausting, but maybe necessary for those huge deals. This very personal nature of control, it reminds me of the stories about Steve Jobs, his obsessive vision.
Oh, absolutely. Jobs' fixation, it wasn't just function. It was aesthetics, and it was total. He saw the product, the Mac, as like an extension of his own really exacting and often conflicting personal taste.
And we have that fantastic anecdote, March '81, right? Debating the Mac prototype's design with James Ferris, the creative services director.
Yeah, that one's great. He starts with one image, then jumps to the complete opposite.
He first demanded the Mac have a classic look that won't go out of style, like the Volkswagen Beetle.
Right, the Beetle, timeless utility, democratic, approachable, a classic.
But Ferris pushes back a bit, suggests something more exclusive, voluptuous, like a Ferrari.
And that's where Jobs pivots.
Hmm.
Completely.
Not the Ferrari, though.
No, not the Ferrari. But he wanted that same statement of performance, of exclusivity. He counters that the Mac should be more like a Porsche.
And he specifically mentions his own Porsche 928.
Right. So you see the shift. From the Beetle, the everyman's classic, to the Porsche, the high-performance exclusive machine, it shows how the product's design was basically a function of his own demanding, shifting personal desires.
The aesthetic perfection was just
Yeah.
his internal control projected onto the hardware.
Exactly.
And the sources are pretty clear that when reality didn't match that intense personal standard, things got ugly.
Oh, yeah. Brutal internal conflicts. That intensity had real consequences. When the Macintosh sales were disappointing, what was that, only 10% of the forecast in March '85?
Yeah, disaster.
Jobs' mood swings, his aggressive behavior apparently just spiraled. Mike Murray, a marketing chief then, actually wrote a memo criticizing it. He called it management by character assassination.
Ouch.
Yeah. So the lesson seems to be that the same engine of brilliance that launches the empire, well, it often relies on a level of, frankly, abuse and volatility that makes the organization almost ungovernable under pressure.
The visionary's demands clash head-on with organizational reality. Fuels all that drama. Now, Jeff Bezos, he offers maybe a slightly more analytical version, less volatile perhaps, but just as intense, that power of perspectives.
Bezos, yeah. He was always studying how others achieved scale. It's interesting. His admiration wasn't just for huge corporations.
Right, like the Domino's pizza guy.
Exactly. Early in his career, he noted this Virginia entrepreneur, Frank Meeks, who made a fortune owning Domino's franchises. The lesson wasn't pizza.
No, it was the model.
It was recognizing and executing a highly scalable, repeatable business model. He was reverse engineering the geometry of success, you could say.
Geometry of success, I like that. Regardless of industry.
And that intellectual curiosity led him to internalize and apparently, quote, off him the computer scientist Alan Kay. Kay's observation was, point of view is worth 80 IQ points.
Okay, point of view is worth 80 IQ points.
So what does that mean in the Bezos context? It basically encapsulates the whole Bezos methodology, I think. It's not just about raw intelligence, right? It's about applying an unconventional perspective to get that market advantage.
Seeing the structure differently.
Seeing the structure of the world or the structure of retail in a way your rivals just don't or can't.
That insight, that unconventional thinking is the real leverage point.
Yeah.
That's what turns an entrepreneur from just a product builder into a systems architect.
Precisely.
And that ambition to architect and dominate the whole system leads us perfectly into our next section. How these titans actually execute that systemic control. How they achieve true market standardization.
Yeah, because when you study these figures, you realize pretty quickly they weren't just content to, win the race.
No, they wanted to build the whole track. And write the rules for the race, too.
Exactly. Bill Gates striving for standards in the early PC world, that's the textbook modern example.
His strategic clarity there seems, in hindsight, almost stunningly simple.
It was. Relentlessly pursue the standard. A Microsoft manager would captured it perfectly. Gates' approach was always to go for creating a standard to get the market share.
And he'd sacrificed short-term profit for it.
Absolutely. Totally willing to drop prices if it meant securing that long-term systemic control. Get the market share first.
Seems obvious now, maybe, but back then, in the chaos of early personal computing, achieving a universal standard, that needed some serious tactical ingenuity.
Oh, yeah. The incompatibility problem was huge. Different chips, different operating systems. It was a massive obstacle to standardization.
Right. Microsoft was on the Intel 8080 chip.
But the Apple II, which was exploding in popularity, used the totally different 6502 code.
Meaning Microsoft software was useless to this huge growing market.
Completely useless. And translating all that software, converting 8080 code to 6502, that would have been a massive, slow, expensive project. Years, probably.
Okay, so a big software problem. But Paul Allen comes up with a kind of strategic workaround. A cheat, almost.
Allen proposed what they called the hardware solution to the software problem. Brilliant, really.
Hardware solution. So, not rewriting code.
No. Instead, they designed an expansion card. You just plugged it straight into the Apple II.
Okay. And this card had?
It had the necessary hardware and software on it, specifically the Intel 8080 chip itself, to basically trick the Apple II into running Microsoft's programs, the ones written for the 8080 chip and the CP/M operating system.
That is brilliant. It just bypasses years of software development.
Spends a fraction on a hardware fix.
And boom, opens up a massive new market. forces Microsoft's code into the Apple ecosystem.
It was pure tactical genius, a standards-bending move designed explicitly to bridge that gap and grab the market share they needed for dominance. Gates got it. Standardize how information is processed, and the revenue will follow.
That drive to control the system, even using extreme leverage or bending the rules,
Yeah.
it really echoes historical figures too, like John D. Rockefeller, using market chaos, crises to consolidate power, build a monopoly.
Rockefeller's strategy was, well, patience combined with brutal timing. He knew market dominance often comes when your rivals are weakest.
Right.
And you see this so clearly during those times when oil production surged and the industry's storage tanks were just overflowing with crude. Massive logistical problems, financial strain on the independent producers.
Chaos for them, opportunity for Standard Oil.
Exactly. During one of these gluts, Standard Oil issued this sweeping, absolutely cold-blooded edict.
What was it?
They announced they would only accept oil for immediate shipment, no temporary storage. They knew the independents had nowhere else to put their oil.
Creating panic, forcing their hand.
Total panic. Forced desperate sellers to accept Standard Oil's terms.
And what were those terms? That's the brutal part, right?
Oh, yeah. During this forced immediate sale period, Standard Oil quoted a purchase price for crude that was 20% below the prevailing market prices.
20%.
And on top of that, they often stalled on payments, deliberately exploiting the rivals' desperate need for cash. This high-handed systemic exploitation just let Rockefeller scoop up vast amounts of crude, refine it super cheap, and basically throttle his competition, consolidate his grip.
And this ruthlessness, it was paired with an iron grip on secrecy, right? Controlling the narrative.
Totally. Rockefeller demanded intense operational secrecy. Friendly journalists couldn't even get a photo. Standard Oil employees were, quote, schooled in Rockefeller's philosophy of silence, especially about money.
Why? Just privacy.
He claimed talking about money was unbecoming. But conveniently, it also concealed the sheer scale of his empire's operations, shielded him from the scrutiny that kind of massive wealth attracts. Strategic invisibility was part of the control mechanism.
Okay, fast forward a century or so. Jeff Bezos. He shows the same drive for systemic end-to-end control. Not oil pipelines, but the digital content ecosystem, starting with publishing.
Oh, absolutely. Bezos' ambition was famously to control every square on the publishing industry chessboard. The Kindle was the hardware standard, sure.
But the real control came from the programs around it.
That's where the leverage was. Take the Encore program.
That was the one aimed directly at authors, bypassing publishers.
It was a total power play against the established houses. Encore let authors publish directly to the Kindle store. Gatekeepers. Gone.
And the economics were better for the author.
Much better. Critically, these authors could get 70% of the sales. Way more attractive than the traditional industry standard. So by offering a better deal to the creator.
Amazon starts dismantling the old publisher-author relationship systematically.
Exactly. Kindle controls distribution. Encore controls the economic incentive for digital creation.
And then there was CreateSpace for the physical books.
Precisely. Their print-on-demand unit. So with that triad Kindle, Encore, CreateSpace, Amazon had the tools to just cut the major publishing houses out completely, establish itself as the new dominant standard.
And you see this focus on total ecosystem control, even in things that seem maybe less profitable, like giving away Prime Video streaming.
Right. Bundling services, maybe taking a loss on streaming initially, but locking in the customer.
But it's more than just bundling, isn't it?
Oh, it's way more strategic. It's building a defensive moat. They rationalize the giving away stuff rivals like Netflix charged $8 a month for by saying it sustained customer loyalty, which it did.
The deco why?
The strategic why was to stop rivals from carving off any significant piece of the everything store experience. For Bezos, total control over that customer lifecycle is paramount, even if it means sacrificing immediate profit on some services.
Yet willingness to sacrifice short-term profit, take on immense calculated risk, financial or operational, that feels like the hallmark of the Titan.
It really does.
Which brings us right to our third section, the appetite for risk and financial leverage. It's fascinating how the sources kind of show a split here. You've got the classic, almost necessity-driven bootstrapping style, and then sharply contrasted with the modern era of just massive financial leverage.
Yeah, it's a real shift. You look at Ray Kroc, the guy behind McDonald's global expansion. He represents that relentless expansionist, funded almost by sheer momentum.
What was his philosophy? Just keep moving.
Pure aggressive action, speed above all else. His famous quote sums it up, They can't read my mind, so I'll leave them a mile and a half behind.
Just outrun everyone.
Yeah. A belief that just relentless expansion fueled by rapid revenue is the best defense. But then you contrast that with someone like Sam Walton.
Right. Walmart's origin story is much humbler.
Much humbler, and Walton's insight was key. Their advantages were, quote, created out of necessity.
Necessity. How so?
Walmart started underfinanced and undercapitalized, and they were in these remote, small communities. They couldn't just rely on easy money or high margins like big city stores.
So they had to be smarter, leaner.
They were forced to innovate constantly, forced to maintain surgical discipline on pricing, forced to focus intensely on improving service. Why? Because they didn't have the safety net. Necessity bred the discipline that later became their massive competitive strength when they scaled up.
Okay, so that's the old school. But then finance gets cheap, readily available. And the modern Titan's approach shifts dramatically towards maximizing that cheap capital.
And that's where you see the rise of the leveraged buyout, the LBO. We should probably define that quickly because it really did change everything.
Yeah, good idea. What is an LBO, fundamentally?
Okay, so an LBO is basically buying a company primarily with borrowed money. And here's the kicker. You use the target company's own assets or its future cash flow as the collateral for all that debt.
Wow, okay. So you're buying the company with its own money, essentially.
In a way, yeah. And the theory behind it, famously pushed by guys like Henry Kravis, it was simple but brutal.
Which was?
Pouring massive debt onto the company forced management to tighten its operations. There was no room for error.
So the debt itself becomes this external force of discipline, the ultimate accountability tool.
It's the whip. Exactly. You know, Ross Johnson, who was right in the middle of that chaotic RJR Nabisco takeover battle.
Yeah, barbarians at the gate.
That's the one. He was deeply skeptical about the whole hands-off promise that LBO firms often made. He knew better.
What did he say?
He knew that when somebody puts in that kind of money, they're going to be up your ass to make sure that what you say you're going to do, you're going to do.
Huh. Blunt, but probably true. High leverage means intense control, not passive investment.
Absolutely. And this appetite for high leverage, it's just exploded in the mid-2000s. Why? Because debt became so cheap, so readily available.
And that's when private equity really took off as a major force.
That's when they became truly potent. These PE firms basically showed the public markets, look, if we can put way more debt on a company to magnify shareholder returns, why can't the public corporations do the same thing?
So it normalized using much more debt across the board.
It did. It urged public companies to leverage up their balance sheets more heavily, which, of course, embedded way more risk, more volatility into the whole financial system.
And even the giants, the titans of finance like Blackstone, they weren't immune to the wild swings that come with these huge leveraged bets.
No way. That intense pressure, you can feel it in the source material. Take Blackstone's massive bet on Adelphia and Charter debt. Huge outlay, $516 million combined.
Okay.
For a long time, that investment was underwater, meaning the debt's value had dropped below what they paid for it. Not good.
Pressure from the top.
Intense pressure. Larry Guffey, a partner there at the time, he recalls these painful internal reviews, especially when Steve Schwartzman himself was, quote, calling you and asking you why it's underwater.
Yikes. I can imagine.
It shows that in high leverage finance, the pressure is instant, it's intense, it's volatile, even for the biggest players.
And this aggressive use of debt, it became almost standard practice, even for companies losing money hand over fist, like the big tech unicorns aiming for scale.
Exactly right. That whole low interest rate environment just emboldened really risky investors. It allowed ventures like Uber back in 2016, still hemorrhaging cash, to go out and tap the debt markets for, what, $1.15 billion? And for someone like Adam Newman at WeWork, doing a bond offering wasn't just about the money. It was seen as a stepping stone to an ITO.
How so? A stepping stone.
Because it forced the company to start reporting numbers quarterly. It imposed discipline on its spending, again, using market structure, financial pressure to enforce control, trying to professionalize in a way.
But the WeWork case that really highlights how at the absolute peak of that leverage, boom, pure vision, charismatic momentum, it could temporarily just defy reality, defy the cold reality you mentioned earlier.
Oh, absolutely. The sources suggest Norman pulled off a kind of magic trick of narrative control.
A magic trick.
Yeah. He somehow convinced really sophisticated investors, we're talking Benchmark, Harvard's endowment, Goldman Sachs, to basically look away, to willfully ignore the cold reality that WeWork was in the office space subleasing business, a pretty mundane business, really.
And instead, they bought into...
They bought into the idea that it was something revolutionary, a tech platform, a community builder, something tremendously valuable, far beyond just renting desks.
So it's like the charisma we talked about in Section 1,
Yeah.
combined with the massive financial leverage in this section,
Right.
created this unstable, but for a moment, incredibly successful compound.
Precisely. The Titan's blueprint seems to rely on that ability, projecting a vision so powerful it just overrides the traditional valuation models, temporarily obscures the huge risk baked into the massive debt.
You need both, the
Yeah.
leverage and the narrative control, to pull off that magic trick.
You really do.
But when that charismatic, personal vision is the only engine driving the whole enterprise, it often seems to demand a really cold, results-driven approach to people, to human capital,
Yeah, that follows.
which frequently leads to mass displacements and sometimes ultimately even the removal of the founder themselves. It's the price of that intense control,
The dark side of the blueprint.
which is our final section, the price of leadership and the cycle of ouster.
Yeah, we've established these titans operate with this extreme centralized control. And when Elon Musk took over Twitter, well, that intense, results-driven focus translated almost instantly into just massive corporate restructuring.
The entity prioritized over the employees. Immediately.
The speed and the scale were just shocking. Musk rationalized those immediate mass firings as necessary, quote, to place Twitter on a healthy path.
And that meant
That meant reducing the global workforce by about half. And in some critical areas, like the infrastructure teams, reports said nearly 90% of the staff were let go. Almost overnight.
90%.
Wow.
And the announcement itself.
Delivered via an impersonal, unsigned email,
Yeah.
the human cost is just systematically subordinated to what's seen as the good of the enterprise.
And this detachment, it seems to extend to how he defined the platform's boundaries, too, even around really charged political issues, framing decisions around his personal interpretation of free speech, but constrained by law.
He was pretty clear about that legal boundary, yeah. He stated he wanted to avoid the, quote, bullshit disputes about Trump, but maintained his principle was allowing free speech only if it was within the bounds of the law. Then he drew a line.
What was the line?
He said, if he's engaged in criminal activity, it seems increasingly that he has, that's not okay. It's not free speech to subvert democracy. So
Okay.
he's attempting to define the rules of his platform not through consensus, internal or external,
But based on the legal parameters of his control, enforced by fiat, his fiat.
very much.
But this all-consuming personal intensity, while it might be necessary to build the company, it often seems to make the organization unmanageable once it needs to mature,
Yeah.
moved beyond that initial founder's impulse.
That's the tragedy, isn't it? The almost inevitable cycle. You see this really clearly in the story of Maurizio Gucci.
From the Gucci fashion house.
Yeah. An executive observing the luxury industry back then noted that so many companies with huge potential just never reach maturity. Why? Because the founder is still in control.
The founder might be a genius at launching an idea.
But their very presence holds it back. That's the quote.
They set everything in motion, but then they become the bottlenecks themselves.
Exactly. So despite Maurizio Gucci having this strong vision, the internal blockages, the chaos caused by his personal intensity, it ultimately led to his removal. The organization needed institutional stability, something more predictable.
And the entrepreneurial engine just couldn't provide that, couldn't transition into the disciplined institutional leader needed for the next phase.
Right, they can't let go.
And that desire for personal, unshakable control, it extends beyond the boardroom, doesn't it? Sometimes into these decades-long family disputes, like the really dark story of Robert Moses.
Ah, Robert Moses, the power broker. Virtually built modern New York City, massive power, but never elected to a major office.
Right, and the sources show that same need for control extended deep into his private affairs.
Oh, yeah. For 40 years, Moses refused to even discuss his mother's deathbed will.
Why was the will controversial?
His brother, Paul, alleged that this later will would have invalidated an earlier one, and this deathbed will would have split their mother's estate equally between the two sons and a daughter, Edna.
Okay, so it potentially cost him money. But why does that matter in the context of empire building? What's the connection?
It illustrates that this need for total control. It isn't just a situational business trait for these types. It's a profound, defining psychological feature. It's who they are.
The same intensity and ruthlessness he used for massive public works projects.
He applied to maintaining decades of silence over a family financial matter. For the blueprint titan, control is universal. It doesn't recognize the boundary between corporate and personal. It's total.
And when these private machinations or these extreme financial tactics eventually spill out into the public, into the political arena, these titans often face a level of scrutiny they seem really ill-prepared for.
That scrutiny is almost inevitable, right? When immense private wealth starts bumping up against public policy, we saw this so acutely with Blackstone's Stephen Schwarzman. Remember the whole debate over private equity compensation? Specifically, carried interest.
Right. We should probably clarify what carried interest actually is. It's pretty central to the whole critique of these financial titans.
Good point. So, carried interest, or carry, is essentially the share of profits. Typically, it's 20% that private equity and hedge fund managers get from the investments they manage. Their cut of the upside.
Okay. And the controversy is how it's taxed.
Exactly. Under U.S. tax law, historically, this profit share has been treated as a capital gain, meaning it gets taxed at a much lower rate than ordinary income, like salaries.
So the proposed tax hike Schwartzman was reacting to, it was an attempt to change that, tax it like regular income.
Right. Classified as ordinary income, meaning these financial titans would pay significantly higher taxes on those huge profit shares.
Okay, so that's the context for Schwartzman comparing the proposed tax hike on his compensation to, wait for it, when Hitler invaded Poland in 1939.
Yeah. Not his finest moment. The outcry wasn't just about a really clumsy, offensive metaphor.
No, it tapped into this deep public sensitivity around the special tax treatment of vast accumulated wealth, especially wealth generated through financial engineering.
Precisely. The comment was immediately massively controversial, forced a very public apology.
Yeah.
And regardless of the, histrionics of the comparison, it just demonstrates that heightened political scrutiny these titans face when their money and how they make it becomes the subject of public debate. The apology only came after the uproar, showing the ultimate limits. Even immense personal control can't always dictate the political narrative. Hashtag outcheck outro.
Okay, so if we step back from this deep dive into the blueprint, what have we found? It feels like a really consistent DNA, actually, across centuries.
It really does.
You've got the intense, controlling, often ruthless personality paired with this systemic genius. A genius for leveraging financial structures, technical structures, whatever's available.
To gain complete market dominance, often by setting new, unavoidable standards. Building the track, like you said.
Right, and this foundation, this approach, it's incredibly durable. These modern titans, they're really sharing the core strategy of historical figures, like Cornelius Vanderbilt.
Oh, the Commodore. He didn't just build railroads or run steamships. He wielded financial power like a weapon.
How so?
He used these brutal, fair-cutting assaults in the steamship and railroad wars. It wasn't just about business competition. It was done specifically to affect movements on Wall Street. He was playing the market while building the infrastructure.
Oh, we'd aiming for
total possession. Consolidation of the entire transportation network under his control.
The ambition never changes.
Yep.
Total systemic control. Okay, so we often admire the founders who succeed, right? The ones who build the lasting empires. But that leaves us with one final, maybe provocative thought for you, the listener. What really distinguishes the successful visionary titan, the one who actually achieves escape velocity, builds something lasting from the highly leveraged, ultimately failed empire builder?
That's the billion-dollar question, isn't it? Consider someone like Howard Hughes.
Okay, visionary, resources, ambition.
Absolutely, had all three. He had the ambition to order 100 of Lockheed's brand new jets, the L-1011 TriStar, a billion-dollar order back then, for an airline, TWA, that he didn't even fully own or control anymore.
Why was that order called mindless?
Because no airline could possibly use 100 wide-body jets economically at that time, and more importantly, he couldn't actually raise the money to pay for them. His chaotic management style, his isolation, it led to mass resignations of senior scientists at Hughes Aircraft, and ultimately he lost control of TWA entirely.
So the vision and ambition were there, but the execution, the control failed.
Utterly.
So is the critical variable just the ability to secure and maintain control of two things at the same time?
What two things?
The internal narrative, keeping the management disciplined, focused, and the external narrative, managing the financial structure, keeping the backers confident, just long enough for the enterprise to stabilize and achieve that escape velocity.
It's a compelling idea. The sources certainly suggest that sometimes. The difference between the next Bezos, the next Gates, and the next Howard Hughes might just be that ability. The ability to hold onto the wheel, navigate the chaos.
Long enough to transition
Yeah.
from the charismatic, maybe destructive energy of building.
To the disciplined, sustainable control required for sustaining. Maybe that billion-dollar mindless scheme is just the warm-up act you have to survive.